All right, folks, welcome back. It's Tuesday. All right, so we're looking at the dollar index. This is our daily chart. And I mentioned last night that I prefer to see it rally. And if it were to rally, if it came up above the premium high of the old imbalance here and came back in, act as support, which you can't really see in the daily chart because it was so violent, but came back down in intraday, you'll see that in a moment, and then rallied up to a bearish order block. So with this price action in here, I'm going to give it the benefit of the doubt and see if we're going to make a run up into here. Okay. Initial targets are here and here. So buy side here, discount low, consequent encroachment, premium high, best case scenario. Okay. All right. So on the hourly chart, I mentioned that again, this is your imbalance on the daily chart, discount low, premium high. Let me go back up to it on the daily chart. Okay. Gray line, okay. Premium high, discount low. Discount low, premium high. This imbalance is what I'm referring to, okay? That's this over here. Premium high, discount low. I mentioned that if it traded above, which it does here, trades above it, comes back down in, finds some support. What's it likely to do? Well, we have consequent encroachment and the discount low, breaker, multiple factors. I told you what I prefer. It's a rally. If it does this, then dollar should go higher. Foreign currency should go lower. And if it does, buy side is resting right here, and we have an imbalance as well. Okay, so we have a breaker, high, low, higher high, trades into the breaker, and it closed into a perfect premium array in the form of this old low here, forming the premium high of this SIBI. Must be coincidence. All right, so 15-minute time frame. Again, buy side imbalance, sell side inefficiency. Body's respecting. Look at the premium high. Look at that. It's beautiful, isn't it? Just like poetry in motion. Comes down, hits the discount low, and then accumulates and rallies. And has displacement here. Then comes back down in. Bullish order block. Anchored to the premium high, to the imbalance on the daily chart. Optimal trade entry here. And runs right up into our objectives noted last night. Eurodollar daily chart. Okay, I mentioned that with the potential bullishness on the dollar, that obviously sets the stage for lower prices on euro. That takes us back into contention for this old low here in that 111.68 level I like. So we've consolidated. We came up, upset all the buy side liquidity in here. Imbalance, small little imbalance. It took that out as well. So somewhat of an errant price action. Then it trades aggressively lower. I like that. Does it need to have a day of modest little retracement before sending it lower? I don't know, but I'm bearish on Eurodollar. All right, hourly chart on euro. Nice optimal trade entry in here. Overnight displacement. What's below here? Sell side liquidity. Imbalance. Trades up into it. Does it fill? No. We have liquidity, imbalance, institutional order flow entry drill. Leave some of it open, and then displacement to the downside. I mentioned that we would likely run below here. If it was to go into this area, it's going to be momentum building to take it below here, and then clean up all this area here. Go back and watch the video, and you'll see it did that here. It actually went even more. So it takes us to this area here. We have sell side liquidity resting below these relative equal lows. So around that 112.80 institutional. Eurodollar 15-minute time frame. Midnight. Institutional order flow entry drill. Breaks lower. Displacement. Optimal trade entry in New York session. Sells off. Fair value gap here. And trades down into the imbalance levels. I showed you on the hourly chart again. Let me take it back up here. That's this and this. And that's the premium high and discount low, and went below that as well. So 112.80 looks like it's doable for downside. But so far for the week, it's already been 50 to 75 pips in that range from last night's analysis. And British pound, I mentioned I was hands off on this. I don't know what it's trying to do. But if we get some further upside on dollar, they may want to come back down into here and then come back completely and overtake these lows. A lot of premium built into that. But, you know, do we get that heavy crash on cable? That remains to be seen. Hourly chart on pound. Really nice consequent encroachment, imbalance. SIBI fills it. Trades aggressively lower. I like these lows in here as a next downside objective. So we'll look for, what's that, 135.30 we'll call it. 135.25, 135.30 in that vicinity. And then 15-minute time frame. Just a really nice return back to discount low with optimal trade entry. SIBI rebalancing. Breaks lower. Bearish order block, fair value gap. Really nice optimal trade entry there. Breaks lower. And again, looking for lower prices on cable. All right, E-mini S&P. This chart will look somewhat familiar because of the lessons and lectures I gave you, I think it was last Friday. So I gave you 2 of the trade framework lectures, and one of them was on the S&P. So we're looking at that breaker, high, low, higher high, extend that out in time. Market breaks below it, hits it, and institutional ortho entry drill with that bearish breaker. Trades lower, SIBI formed. Then we trade back up into it here. Sells off, goes to the imbalance. That was part of the lecture from last week. And then we retraded back up into the imbalance here. And then we had the Martin Luther King holiday, which we had an abbreviated trading session. So trading stopped around 1 o'clock in the afternoon New York time. So with that time distortion in here, it still didn't change the fact that we moved back up into that premium array. So all of this is time distortion, holiday volume. They're holding it in a premium so that way they can send it lower to attack the sell side liquidity here and the sell side liquidity there. Okay, now if you look closely, you'll see that we had a higher high on Dow, lower high on NASDAQ, and lower high on S&P. So we had SMT divergence between the indices, and then here as well. So we had high, higher high, high, lower high, high, higher high. So it diverged while it's inside this SIBI. Plus, it's a balanced price range because we have this area over here and this area over here when it's bearish. And that, my friends, is going to be it for today. I will touch base with you tomorrow with a lecture on balanced price ranges. And until I talk to you then, be safe.